Welcome back. Home buying demand in the US just decreased to nearly a 28-year low based on a brand new report from the MBA just posted on a Wednesday, August 9th. So I have a lot to share in today's video. Let's go ahead and dive right in. I do not want to waste your time. So this is a report, again, just posted on the 9th here. It says applications overall, which includes refis plus purchases, decreased by 3.1%. Of course, refis are decreasing because rates are so much higher than they were 1 year ago. So it makes sense that they're indexed based on the amount of people submitting applications for refis decreased by 4% from last week. And of course, it's down by about 37% from 1 year ago. That makes sense. Here's another thing that's pretty shocking here as well. This is a factor or a metric that I follow each and every week because this is a forward-looking indicator of home buying demand. This is big news here because their seasonally adjusted purchase index, which is a measure of the amount of people submitting loan applications to buy houses, decreased by 3% from 1 week earlier, and it's down by 27% from 1 year ago. This may not sound like a big change here, but based on my own analysis, their index is around 149.5. And that's actually the case besides late February of 2023. Their index is now at the lowest levels going back to early May of 1995. Here's a chart from the Mortgage News Daily. So the current levels right now, besides February 27th as well as February 20th, we're at the lowest levels going back to 1995, as you can see right there. To be exact, for the week of May 1st of 1995. But wait, there's more, because according to the MBA, rates increased for all loan types, with a 30-year fixed rate, mortgage rate, increasing to 7.09%, the highest level since November of 2022. On top of that, the rate for FHA mortgages increased to 7.02%, the highest rate since 2002. FHA loans, if you guys aren't familiar with those, are loan programs in which the minimum down payment is only 3.5%. Therefore, this tends to attract first-time homebuyers for that loan program. But the highest rates going back to 2002 is quite shocking here. Therefore, mortgage applications, not surprisingly, continue to decrease given these higher rates. And in fact, their purchase index has now fallen for 4 consecutive weeks as well. So not only are home buyers right now facing high rates, of course, right now, but also facing a low amount of homes for sale for existing houses, what I've been talking about on the channel for quite some time here. But here's a really good chart showing just that. This is according to our good Uncle Fred here, and the source here is Realtor.com. So for the month of July, there was around 647,000 houses for sale in the U.S. Going back to July 2022, there was around 691,000. That's a decrease of 6% in the number of houses for sale year over year. Another way to put this is that we have around 44,000 fewer houses for sale right now compared to July of 2022. But the changes from pre-pandemic levels is of course much worse. So look at July 2019. Back then, there was just over 1.2 million homes for sale. And compare that to July 2023, that's a decrease of 48%. It gets worse though, because look at July 2018, there was just under 1.3 million houses for sale. July 2017, just over 1.3 million. And then July 2016, nearly 1.5 million houses for sale. So comparing July 2016 to this July, we're down by about 56%. And another way to put this is that we're missing approximately 815,000 houses for sale. So therefore, home buyers are facing very high rates, especially compared to 2020 through early 2022, but also facing a lack of houses for sale as well. But unfortunately, I have more bad news for potential home buyers right now because it just got harder to qualify for a loan. This is because the MBA posted on August 8th that credit availability, their index based on that, actually decreased. And when their index decrease, that means that lending standards are actually getting tighter. And of course, when lending standards get tighter, it becomes harder to get approved for a loan. So their index right now is actually at the lowest levels going back to 2013. And here's a chart showing just that. Their index at 96.3. Again, the lowest levels we've seen going back to early 2013 here. What I found to be interesting regarding this chart right here, which goes back to 2011, is right at the onset of COVID, lending standards got very, very tight. And they more or less went sideways here in 2021 through early 2022, but ever since then has been more or less decreasing. What's also eye-opening as well is that look at this right here. This is the same chart going back to 2004. As you can see right here, the lowest levels we had in about 10 years now, but at 96.3, this is well below the very, very loose lending standards we had in 2004 through really 2007. When their index back in 2006, 2007 was approaching 900, now it's only 96. So how wild is that? Back in 2006, lending standards were about 10 times looser than they are today. In regards to some more leading indicators of home buying demand, take a look at this. This is Google Trends for people searching for homes for sale. The search term homes for sale. Their index right now is at 95. 1 year ago, their index was 100. This means that more or less we're seeing about 5% fewer searches for homes for sale on Google compared to 12 months ago. Also, in looking at real estate showings across North America, according to showingtime.com for the week ended August 8th, this year is an increase of 6.8% compared to the first week this year. Compare that to last year at this time, we were down by 4.6% compared to the first week of 2022. In stark contrast, in 2020, we were up by 41.7% compared to the start of 2020. So to summarize today's video, the number of people submitting applications for home loans have now dropped to nearly a 28-year low, excluding the end of February this year. Also, we're seeing lenders actually tightening their underwriting standards. And therefore, in my personal opinion, because of that, coupled with a lack of housing affordability due to elevated rates, but on top of that, we also have this time of year where we tend to see a decrease in home buying activity each and every year. So all that combined here is probably going to cause a huge decrease of closed home sales in the months ahead. And because of that, coincidentally, we could see housing inventory increase because we're not seeing enough contracts being signed between buyers and sellers, and therefore houses will take longer to sell, and that could increase housing supply on a national level. Of course, real estate is local, and of course, there's some areas in which inventory is down, and of course, areas in which inventory is up greatly as well. But what's your biggest takeaways from today's video? And of course, what's your real estate market predictions? I would love to hear that. Hope you guys have an awesome day. I appreciate you, and we'll see you on the next video.